Hey folks, welcome to a product review at Finominal. Today we're going to look at Standpoint's multi-asset fund that trades under the ticker BLNDX. Now, the fund has close to $1 billion of assets under management, and its portfolio is comprised of global equities and a position in a CTA. Now, CTA stands for Commodity Trading Advisor, sometimes also called a managed futures program or like a trend following strategy. It refers to all kind of like the same strategy of trying to systematically exploit the ups and downs of asset classes with long and short positions. Now, let's have a look in terms of how BLNDX has performed. And we're going to use our alpha analyzer. And although we do have a suggested benchmark, which is the S&P Target Risk Growth Index, which effectively provides exposure to stocks and bonds, we don't believe there is an appropriate benchmark for BLNDX. And that is simply because it represents a multi-asset fund with long and short positions, and comparing that to a long-only product is not reasonable. Having said that, we can look at the performance of BLNDX. And what we do see is an impressive track record since its launch in 2020. And that is simply because it avoided the large drawdown during the COVID-19 crisis in 2020, as well as during the 2022 bear market in stocks and bonds. And so you can kind of see this consistent upward performance, which is great. Now, let's analyze how we can explain that. And we're going to run a returns-based factor exposure analysis, where effectively we see that the beta to the S&P 500, i.e. stocks, has been consistently positive. We can see that the exposure to currencies and commodities has been time varying. And we can see that the exposure to bonds has been consistently negative, which means this fund has been shorting bonds. And net entry has been fantastic, especially in 2022, because as bond prices fell, this fund benefited from its short position. We can also see that the beta to equities is below 1. And that is simply explained that the fund has a range for its equities allocation that is between 33 and 67%. So it only has some equities position there, but never zero, never 100%. Now, from a contribution perspective, we can see that in some years equities contributed positively, like 2022, 2023, and 2024, negatively 2022. And we can also see that in 2022, the short position in bonds contributed significantly to the return of BLNDX. Now, that's BLNDX on a standalone basis, and there's not a lot of funds we can think of that are its peers. Having said that, what we can do is we can try to replicate it. So on my dashboard, I've created a simple replication of BLNDX using only two funds, which is the MSCI World and an ETF, DBMF in that case, that is a proxy for the CTA industry. And we allocate 40% to global equities and 60% to CTAs. So let's compare BLNDX versus its replication. And what we see is effectively that the replication is pretty close because we can see the trends and performance almost identical since 2020. But we also see that BLNDX has had a much higher return. And I think we can attribute that to the replication portfolio having static weights, i.e. 40% to equities and 60% to the CTA, versus BLNDX is dynamic in the sense that its allocation to equity ranges between 33 and 67%. And that, I think, helped it outperform compared to the replication during the COVID-19 crisis. Now, the other security we can use for comparative purposes are SST, which is effectively an ETF that does the same thing as BLNDX, i.e. combines equities and managed futures. Now, it is much more volatile, as you can see, and the track record is less than a year, so we have to be a little bit careful in terms of not reading too much into this. But you can see, broadly speaking, it's the same trends. Now, from a volatility perspective, we do see that BLNDX has close to 9%, the replication is slightly lower at 8%, versus RSST is almost double that. We also see from a Sharpe perspective, the Sharpe of RSST in that very short time period, right, was 1.22. And the replication is pretty close to BLNDX itself. Now, that kind of concludes our analysis of BLNDX. And as mentioned, the fund has achieved impressive track record over the last 4 years. Having said that, we also know how it is, what it's made of, and that we can replicate it. Now, the replication that we introduced is worse from performance perspective, right? And you can naturally go for BLNDX, right? And the manager has created value, so we got to give credit there. The one aspect to think about is that it's slightly complicated to think about where to place BLNDX within the asset allocation framework. Now, we've seen some clients that have allocated BLNDX into the alternatives bucket because they have long and short positions in commodities, currencies, bonds, and so on. But that's not quite correct, because between 33 and 67% of BLNDX will be allocated to equities. And so that is the one kind of major downside of this product. It's a great strategy, combine equities and CTA position, but it's complicated to think about it in terms of where it should be placed within an allocation, how much you should allocate to it. And when you do contribution analysis in terms of trying to identify like what has impacted this performance, that's a complicated process. And there, of course, you can consider, instead of buying BLNDX, you can just buy the components, which are much more cost effective. Now, that's a short review of BLNDX. Hope that helps. Have a nice day.